Alrighty, guys. I hope everybody is having a great day. It is Wednesday, the 24th of May. I did not go live this morning because I did have a dentist appointment, but when I did get back, I saw I took one play that I alerted in the chat, and then I went live for a PM session, and then we took another trade on the live as well. Both of them are winners. I'm up around 3,700 on the day. Really good day for me. So I'm happy with that, even though I didn't even plan on trading today, but I was very confident with the trades that we took. And again, the scalping model is continuing to show its strength. So we're going to keep back testing it, keep seeing if, we can find it in our setups, and we'll see if we get more in the future. So going into today, I did have honestly, I wanted to see a more push to the upside before going lower. Notice we were at the time in this fair value gap. Now, in the overnight session, I was expecting possibly a bounce, but we did end up selling off at the open and continued lower. Now, if we're looking at ES, I still think the draw on liquidity is this low, right? When we talk about, low resistance liquidity run, notice all of these lows here on a smaller time frame. We've now swept those, now pulling back to that 4-hour fair value gap we're rejecting. I'd like to see us come back lower and sweep this low. I'm not confident in taking any sort of longs until NQ or until ES can come down and sweep this level. So it's going to be interesting going into the coming days and going into tomorrow, because I'm not confident taking any longs yet until we come back down and sweep this. So I'm still bearish on ES, but we do need to take into account NQ. Looking at the 4-hour, we've sold off. Notice, though, looking at a bigger time frame, looking at the daily, we've swept that high. We've had a market structure shift. Now, on a daily time frame, we haven't really had a clear market structure shift, but on a 4-hour, we have it right here. This is now pullback, right? I want to see if we have a daily. We don't have anything real on daily. We have a 4-hour fair value gap that we've kind of bounced over now, but we are now retracing back into discount, and we're also in OTE up here. So I'd like to see if we can sell back off and continue lower. I still think the draw on liquidity is lower for ES. We could see potentially higher. Again, if I was to draw in the short-term range of this, we've already hit discount and we could potentially sell back off. But excuse me. Excuse me. So we can eventually possibly go up to discount of this entire range here. So looking at the 4-hour, we don't really have any prominent high until that high. So we could potentially see higher on ES going back into these, previous fair value gaps. And that's kind of what I'm more leaning to, just because NQ is showing so much strength, and we might get, that run into tomorrow. So going into tomorrow, I'm expecting kind of one of two things. Honestly, we could do whatever, but I might be expecting a little bit more of consolidational move, especially after NQ had this big move in the overnight, in the afternoon session. I don't know if we're going to, reject back down or continue higher. I'm expecting maybe some consolidation, maybe a retracement back down. I'll have to see what happens in the overnight session. But on ES, I do want to see us go lower. I still think that the draw on liquidity is this previous low that we haven't swept. Again, all this then becomes low resistance liquidity run. So now that we've swept one of them, I think we might bounce out, stop all those people out that want to go long, and then come back down and sweep that low. All right, let's go over the trades that we took today. So I took one on ES, one on NQ. The first one I took was on NQ. Now, what do we need for our scalping model? We need, number one, clear trend. Do we have a clear trend? Yes, we do. We have a clear downtrend here. Okay, next thing, what do we look for? Retracement to discount. Okay, going to the 5-minute. Go from the range that we're in. Go to the high, to the low. We've retraced a discount, right? So if I'm looking at the 1-minute, we can see we've had a big push up going to discount. Also, NQ swept this high. Now what do I look for? SMT in the trend, right? SMT in the bias of the trend, right? So we have bearish SMT, bearish trend, move to discount. What is the next thing we need? Clear draw. We know the draw is probably lower on NQ with the trend. Next thing we look for, we don't need to break a structure. All we need is a fair value gap. NQ forms fair value gap once we start selling off. Again, if we're looking at ES, you can see this is the SMT. We had an SMT. Where was it? Let me go down to the 1 minute. This was the high here, and the low was right here. So ES was making a higher high. NQ is making a lower high. So I'm going to take obviously whatever the weaker one is, which was NQ at the time. Pull back to the fair value gap. I entered short, and I ended up taking off all of my position at this first one. Now, the reason I didn't let this run is because I noticed we were forming SMT. If we're looking at this, notice ES sweeps this low. Right when I see ES sweep this low, I know NQ just swept this internal low. So we're forming SMT. That's the reason I did not let my contracts run, because I knew we were probably going to bounce after sweeping that level, right? That's something that we want to pay attention to when we're in trades. Being able to understand when and when not to let your contracts run. I knew if I was to take off, or, most of the time, if I'm going to lead my runners, they're going to get stopped at break even because we're forming SMT at the lows. Notice we end up, it would have gone stopped at break even. So I took off all of my position when we came to this level because ES was looking weaker. We broke that low. It looked like NQ wasn't going to take that low out, and we were forming SMT. So I decided to take it all off there. That was the first trade that we took. Beautiful short setup. Again, our scalping model. Next setup. NQ had a nice push to the upside, sweeping this high, again, forming another SMT. Which one am I going to take? Obviously, the weaker one. We have ES being the lower high and Q taking the higher high. Now, the reason this trade was a little bit more scuffed is because we didn't really get a clean fair value gap. Normally, most of the time, we want to see, a fair value gap. No, we never ended up getting one. So the fair value gap I ended up taking was this small little 2 minute fair value gap here. So I got filled somewhere, not actually the best fill. So I think that's probably accurate where I put that. But I entered in this fair value gap. My stop loss was up here. And then I ended up, again, also not letting this one ride all the way because I wasn't liking the momentum, right? Especially this was, again, keep in mind, this was like 2 hour or less than 2 hours before the close. So not a lot of volatility. So I wasn't planning on letting this go all the way. But I did ended up taking off half at that first low getting taken, and then I took off another % here, and then I let my last contract run, and then my last contract ended up getting stopped at break even. So that was another trade that we took with the scalping model. And then the rest of the day we just had that big end of day push from all the tech news coming out. So does anybody have, first of all, any questions first? Took your scalping model at 8:25 EST. Let's see. Was it NQ or yes? And let me see if I can actually see it first. Oh, yeah. You not only have this SMT here. Look at this. You not only have this SMT, but you have this one here as well. Dude, the scalping model is really, really nice. I've really been liking it recently. I'm going to continue to trade it, and just because I'd probably give it honestly like a 90% win rate, if not higher, at least from what I've been doing from backtesting and from trading it. So if you have all the requirements met for it, it's a really, really nice model to know and to trade. You think we're in the middle of two draws, like ES wants lower, NQ higher, the fuck, or time, or I just said, and NQ higher, time frame wise wants higher. That's a good question. So again, looking at the overall structure, if we zoom out on both, I'm still bearish on both. On a bigger time frame, I still think that we're bearish, right? Notice NQ swept this high, and we're having displacement inside this range. But notice on a bigger time frame, we've now put in that low. So this would be our market structure shift. Now we gapped up. Look at this daily time frame. We've gapped up now, right? So NQ 100% could see higher now. We could, but looking at the 4 hour, I still think we're bearish, right? Because this would be market structure shift, pulling back to discount. I want to see a big fat red candle to bring us back down. Now, I don't know if that'll happen. This candle is going to be, again, this is going to be based off of news, right? Since we've had a lot of tech earnings, this is what's going to be pushing us up in the coming day if we are going to continue higher. Now, on ES, notice the push on ES is a lot less significant than the push on NQ. ES is still looking pretty weak, and I would like to see us continue back lower. Notice, I think we also are forming a little bit of an SMT here. If we look at the high created here on ES, we notice that it already has now been swept. Now, it has not been swept on ES. Now, we have come really close to it, but again, we still technically are forming an SMT. The draw could be lower. This would now be your entry short if you were going to trade our scalping model on a bigger time frame. Now, this is on a 15-minute. Normally, we'd take it on a 1 minute. But this is technically our scalping model if we were to take a trade. And we already are, and we're back to weekly opening gap, rejecting weekly opening gap. When marking SMTs, how do you know which highs and lows to mark? You go from the same time. So notice how when I move my mouse, it goes on both screens, right? So if I'm looking at this exact same high here, notice it's the exact same time, right? So the high on ES and the high on NQ, it's the exact same time, 4:45. Now, if I go to the exact same high here, it's the exact same time, right? 18. So it's the exact same time. You're just looking at the highs and the difference of it. What are the conditions again for the scalping model? Clear trend here. I'll draw it out. Actually, I'll just show you the fucking, I have the screenshot of it. I think I saved it. This is it. Strong volume, recognition of trend, confidence in the draw and liquidity, SMT in favor of the trend, retracement to discount, fair value gap for entry, targeting a recent high or low. Scalping model is fire. I found the setups, just haven't executed quite right yet and didn't get price action to the fair value gap today, but it hit for sure. Yep, just keep backtesting it, brother. Keep backtesting it. Once you build confidence, it'll be that one of those go-to models that I've been building up as well. Definitely one of a go-to now. Just going to continue to keep backtesting and keep trading it. What I like about this strategy actually makes sense. I know. I agree 100%. Can you have another example for that scalp in today's market? We can go check and see if there was another trade. I have noted to see how price reacts to the inverse overnight to determine where we want to go. Reacts to the inverse. What do you mean? What's SMT stands for smart money technique. MMS stands for market structure shift. Nice. Looks good, brother. Can you explain a little which SMT you would take the trade off of when you say this one is weaker? Yeah. So you got to think about it logically, right? If I am trading a bearish SMT, right? Looking at the trades that we took earlier, right? Let me zoom in. Right? If let's say that the first trade that we took, if I'm going to take one of the other, right? Because they're both in the same favor, right? They're both in the same favor. Now, in this example is a little bit different because actually ES ended up being weaker in this trade. Notice ES ended up selling all the way to that sell side when NQ actually struggled a lot to get to that low. So in this case, most of the time, this is kind of a rare occurrence, but most of the time you want to take the one which is forming the lower high, right? That because obviously showing that it's weaker in a sense, right? Now, sometimes you're going to be, it's not going to be that way like today where ES just, had a really big sell off after that. But most of the time you want to take whichever one is weaker. So ES is forming a higher high, which means it's, logically it's stronger. If we're looking at NQ, it's forming a lower high. Logically it's weaker. So I would take whatever one is forming the lower high. Yep, and whichever one's the higher high on a bullish SMT. Yep. Now, another way that I also like to do it is I'll trade whichever one has better price action. Because they're both going to move in the same way, right? A bearish SMT is a bearish SMT. Both are still bearish. I might trade whichever one has better price action as well. Let's look further in the day and we'll see if there was any other possible setups using our model. There's one right here, I think. That one's a little kind of scuffed, but yeah, I probably wouldn't have. Actually, yeah, it's not that bad. So I guess this is technically a setup, I guess. Um, so we're forming it. There's a lot of different ways that I could draw this in. Um, I don't really. ES did not have a lot of clean action here, but so I probably wouldn't have taken that just because ES is kind of just slowly, kind of slow grind to the downside. But notice NQ, right? We got SMT at the highs, pull back to fair value gap. You go short, targeting that low. We'll zoom back a little bit more. We'll see if there's anything else. Here we go. Another one. Again, I think this is the one that we went over. Yeah, this is the one that you took. Again, another good setup. Then I think this is just the high that we already put in. So we'll see if there's anything else here. That's equal high, so I wouldn't consider that SMT. We swept this high. Did that high get swept? No, it didn't. Okay, so this possibly a setup here. This high ended up getting swept on NQ. This high never got swept on ES. Now, notice kind of hard to tell what your entry would be because there's not really any. Again, it's all low volume. So it'd be whatever that recent fair value gap is, or the previous one created. So it'd be this right here. This is the first one created. Stop. I wouldn't even put it at the high. I'll put it like somewhere there just to manage risk. First target would be that previous low. Next target would be that. And then that ended up working out as well. So as long as we know what drawn liquidity is, we can just look for SMT and fair value gap entries. Yep. And you have, again, everything else lines up too. You have strong volume, clear trend. Because if I zoom out on a bigger time frame, right, I'm looking at this action, right? If I'm looking at this action, I have a clear trend on a bigger time frame. I can use the scalping model on a smaller time frame. Do you believe in chart patterns like Head and Shoulders? No. It's a powerful pattern. I don't think so. I think Head and Shoulders is literally just an internal sweep of liquidity, a break of structure, and a fair value gap. This is okay. This is what you see. All right. That's what you see. What I see is this. That's what I see. All right. But the difference between mine and yours is I have a system. This has no system. You're just looking at a drawing, but you don't know what the actual pieces that make up of this drawing. So you don't know what you're looking for. And you don't know how to apply risk to this. With this, you know how to apply risk and you know what you're looking for. You have a system that you can repeat. Can you explain how you really determine what the next strong liquidity is? Is it based on whether the buy side or sell side is taken first? Yes, that's a big part of it. So a big part of it is recognizing, again, discount and premium, right? We know markets like to go back to discount. So if I was looking at this market right here, right? After we sweep this low, now I'm still bearish, right? Because looking at a bigger time frame, right? If I zoom out to a daily, that's the biggest thing. Always zoom out to a daily. If we sweep this daily high, what's the drawn liquidity? Whatever the previous low is. The previous low is right here. So always zoom out and it'll give you a clear direction, right? We sweep this low, big pressure. There's no low here. It's just, two big candle moves up. The only low we have is this low right here. And there's relative equal lows. So this is technically, I still believe, is the draw on liquidity. Now, notice we do have a daily fair value gap. Now we could come up to this tomorrow, which actually I would not, I think that's probably a possibility, a big possibility, that we come back up to this daily fair value gap tomorrow and then sell back off. But I still think the draw on liquidity is lower on a bigger time frame. That's something you got to pay attention to, though. The draw on liquidity still could be higher now because we could be going up to potentially, take out relative equal highs, maybe up here, going back into that daily fair value gap, and then going back lower, right? So I'm not going to take any sort of setup until I get, something I can apply risk to, right? Yo, wait, lol. Did something click for you? So can having a non-bias work too? What do you mean? So you short on ES? No, I'm just drawing this out. This would be a short, like you, again, I'm not going to take this. Like you guys can do whatever you want, but I'm just back testing price here. Cause what this is this would be our scalp entry. This would be our scalping model on a 15-minute, right? This is our same model, just on a bigger time frame, right? S&P at the highs, displacement back down, clear ES, draw on liquidity, pull back to the first fair value gap. This would be our model for our scalping model. This is on a 15-minute. So I'm not taking this because I've never taken it on a 15-minute. So I'm just going to watch this back test price and see how this plays out. My first price target, if I was in this, would be that previous low. Since you have different bias on compared to smaller time frame. Yeah, well, that's why you got to be aware, right? That's the biggest thing, is being aware of different time frames. Now, on a smaller time frame, if I'm going to look to take a short on ES, I want to see that all of those time frames are going to give me the best entry. Because let's say I want to enter short, or I want to enter long, whatever it is, and the draw is higher, but if I zoom into a 5-minute, the draw might be lower, right? We might want to sweep internal. Like, for example, if I want to take a long here, right, in this fair value gap, there's no reason to. We haven't swept that low first, right? Now we come down, sweep this. Now being able to, on a bigger time frame, the draw might still be lower, but now that we're starting to consolidate and we get a bounce up, you don't want to just short at the lows expecting to just see a dump down. You want to wait for price to give you a setup instead of trying to predict where the market's going to go. Once you have the draw, you still need the setup and everything checked off of it for you to enter, right? The draw is just giving you conviction and confidence. So the draw on liquidity takes time, right? Now, I made a video on my daily bias, and I think my daily bias goes over a really easy way to, or like how I find the draw. I explained it really well. Now, the way that I like to here, let's do this. That's what I'm gonna do. Let's go over price action. Let's just go somewhere and we'll talk about what I think the draw is, right? So let's just like replay here, right? So the draw on liquidity, right? On a 4-hour time frame. If I was looking at this, right? Number one, I still think we probably go higher. Now, what are the reasons that are indicating we go higher here on ES? Well, number one, we've swept this external level on a daily time frame. Number two, I know that market's probably going to retrace to whatever discount is of this range. So I draw this in. Now we've reached a discount, but at the same time, a lot of the time, most of the we'll go back to whatever these imbalances are. So see this imbalance right here? I know this probably is going to be whatever the draw is. Notice we're also retracing back down. So I would like to see us continue to hold. Maybe we're retracing back down a discount. So I'm still long biased, but on a bigger time frame. But on a shorter time frame, we could still maybe sell off and go to that discounted area, right? So that's when I go down to my smaller time frames and say, okay, what would I want to see here? Okay, if I'm looking for a trade to take long, right? I have a clear trend move. I could say, okay, maybe we come in here. I have if I draw on my thing, we're about to go to discount. I want to see us maybe come down here. Then once we come down here, I'd want to see a internal sweep, right? Okay, now we come down again, still no trade. We've created lows here. I'd want to see that more get swept. Okay, now I zoom back out, right? Go back to the 4-hour. Say, okay, or actually go back to the daily. Say, okay, I'm still bullish on this, right? We swept that external low. I still think we go higher. But now we've retraced to discount, right? So now I think we can definitely go back higher. Also, keep in mind, inverse fair value gap. We pull that inverse fair value gap over. I want to see this continue to hold here now on a bigger time frame. So let me get rid of this. Now what I do is I zoom back in. If the market was going to open right now, right? If I was going into today, this is what my bias would be. Okay, I'll say, guys, I'm going to be, not too strong of a bias. I'm going to be more leaning long than I am short. And the reason is because zooming in to a 1 hour, we've swept that previous low. We're in a bigger fair value gap. We've retraced a discount on a daily time frame. Now what I'd be watching for is possibly a break of structure back to the upside and then looking to possibly take a long. So now I zoom in into a smaller time frame and I'd look to see, okay, do I want to see, my model, my long model or whatever I'm looking for, right? So I'm still bullish. Notice we come back down, now starting to get, more pressure. I'd maybe want to see internal being swept. Again, still a lot of chop that I wouldn't really trade, but I'm still have a long bias, right? So at this point in time, we're, continuing to go to the upside here. So we've swept this low. We're having big volume going back to the 4 hour, right? We have, clear market structure shift pulling back up. We're having displacement. This is telling me that we're most likely the draw is now going to be higher because not only have we retraced the discount on a bigger time frame, we're overall bullish on a bigger time frame. We swept that external high. We have market structure shift, pull back to discount, and I still think the draw is higher here. And we have an unfilled imbalance. All of these things lining up gives me confidence to say, okay, the draw on all of these time frames now align, right? So now I'm super bullish. I could take possibly a trade. I'd want to see a little bit more of a cleaner price action setup, but I have confidence in the draw, right? I have confidence in the draw now. So what I'd look for is, is there any setup, whatever it is, you could look for, smaller time frames, whatever it is. Now we could still come back down, sweep this low. There you go. And then the draw gets met. The draw also is that unfilled imbalance that gets met. So again, at this point in time, I'd be okay. Since we're, a little bit overextended, I want to see us come back to discount of this range now, right? So discount of this range. So now what I would do is I'd zoom in, smaller time frame, let's say 30-minute. I'd maybe want to see internal swept, right? So this to me looks like it's just a liquidity sweep. So now this liquidity sweep, what do you think the draw is? Probably that previous high, right? Because this is not a market structure shift because there's no displacement. Since there's no displacement through this, notice how we break through, sweep the low, and then instantly reject. So this is telling me the draw is probably whatever that previous high is, right? So now zooming in, I have a bias. Oh, I don't think I can go down to a 5-minute, can I? I can only go down to a 15-minute, whatever. So we sweep this high, coming back down. Now on a bigger time frame, I'd want to see this become market structure shift, right? Because I know, there we go, draws met. Now that's internal. Zooming back in. Again, I don't know when we're going to sell back off, right? Go. So now, if I was going to open the day here, right? Go to the daily. All right, well, I know the daily, we have big push up. I know the draw is probably going to be this low because I know at least this is a daily fair value gap, so I'm going to draw this in this important level. Looking at a 4 hour, I also know we're probably going to displace back to discount of whatever this range is if we put in that high. So discount would be here. So I would know we're probably going to retrace back down. So if this was my ideology, if I was going to open today, I'd say I'm bearish today. I think the draw is most likely going to be lower. I want to see us retrace back to discount. Okay, so then I zoom in, right? 15-minute, is there a setup? Maybe we have this could be internal swept right here. Now, I don't want to trade this because this would be a gap down, right? This would be market structure shift, but since it gapped down, I wouldn't really trade this. But let's say this is just a fair value gap. Again, this still could work out. This could potentially be a short targeting the low, whatever it is, right? Because on a bigger time frame, we're still bearish. Now, this isn't a high quality setup because it's not actually a fair value gap because we gapped down, but we'll see how this plays out just based off of what I think the draw would be. Now, I'd want to see a more of a trade, right? So what a better trade would be is once we do get an internal break, right? Which again, we still haven't really gotten. I'd want to see a displacement lower, which we haven't gotten. So this would have been, so this now what I'm looking for, sweep here. Now I want to see a break of one of these lows, or if we put in a low, there we go. So now I have, some sort of telling me that we have a break lower. We'll see if this ends up holding. I'd want to see this now come back down. So once we pull back to discount, I want to see that retrace to discount somewhere up here and then sell back off. Right. So if I'm going into the day, I'd be bearish. Again, we'll see this pulling back to discount. There we go. We're at discount. Now I would want to see us sell back off. Again, bigger time frame wise, we have to be careful trying to short these setups because on a bigger time frame, like a daily, the daily draw is still higher. right? The daily draw is still higher. So we have to take into account all those different things. So 15-minute, we swept the high one more time. No, we're at least going to go back to discount of whatever this range is. There we go. That's discount. Now displacement. Now here, I think the draw on liquidity is still lower. Now, why I think the draw on liquidity is still lower? Again, zooming back out to the daily. We still have this unfilled daily fair value gap that we haven't come back into. 4-hour time frame. Notice we're starting to, have a big move up, big move down, big move up, big move down. This is showing exhaustion, right? This is showing exhaustion. Notice we have a big move up and then it just instantly sells back off. So I would use this honestly as a sell, market structure shift, internal swept, pull back to fair value gap, targeting the low of the daily fair value gap. Now, if I was to go into today, I would say, okay, the draw is lower. Now, it sucks because I don't want to trade. Normally, I don't trade on 15-minute. I'd want to zoom in, but it's farther away, so I can't see the market data from there. But if I was going into today, again, have this fair value gap here. Now, if this gets above this is when you have to be able to, change your bias. Now, I also would want to see what ES looks or NQ looks like at this time because I can't tell if we're forming SMTs or not, which I'm kind of limited to what I'm looking at here. But again, continue to reject the fair value gap. The draw should now be this 3951 level. And then also whatever that 3928 level. But I want to be cautious when we do sweep this low because we could sweep this low and then bounce. But I would want to see, again, bigger time frame, 50% of this entire range, right? 50% of this entire range, which we did put in a new high, so it could be, right? It is higher since we made a new high. And there we go. We sweep it. And then we'll see if we go back to 50%. There we go. We sweep the range. So that's why you take it off here. This would be a long setup. This would be a long setup, right? We sweep the low. We're in a daily fair value gap, market structure shift, pull back to that big imbalance, that big fair value gap, long. Now, if I was to take a long here, I would want the draw on liquidity to be higher. But also being careful because we haven't hit discount of the range. Now, this is not where you would enter. You'd enter here, so it's a bad example, but I'd want the draw to be this high because we've swept that external level, right? There we go. Draws met. Now selling back off. Now, if I was to open up today, right? Let's start fresh here. We've swept this low. But we've also swept that external high. I want to zoom out. 4-hour. Right? I know that we've retraced, again, still technically we're not back in the discount yet. So we could definitely see lower. We've swept that order block high, still kind of trying to reject. Bigger time frame wise, we're in this imbalance. I still would want to see us sell back off a little bit more. So I'd wait for a little bit more confirmation. So going into today, I could go both ways. Now, again, I'd want to zoom in at this point and see if, what the 5-minute, what the 1-minute looks like, because I could then scalp internal draw. But right now I'm just watching the 15-minute, so I'd have to be more patient with whatever the draw on liquidity would be. So now that we're at this point, the draw to me clearly becomes this low, right? We're slowly starting to chop to the downside. We've come up, rejected this fair value gap. Now we have relative equal lows down here. I'd want to see us come back, sweep this low, potentially go back to discount. So what would happen is now we have a clear trend, right? 15 minutes. So I'd zoom into the 1-minute, look for an SMT, right? Possibly like this, and then take that trade scalping towards the draw, right? So I have a 15-minute bias here. I think the draw is lower. We're having a clear trend to the downside. If I zoom into a 5-minute, it's going to show, a big trend down. I'd look for an SMT, and then that's where I take that scalping model, right? Because the draw on liquidity to me clearly looks like this low. There we go. Draws met. Now, again, notice how we sweep it and then instantly bounce. So the draw would be whatever this previous high is. So the previous high is here. Pull back to this little fair value gap. This could be a possible long, targeting the draw. Want to see that continue to hold. That would be stopped because we didn't hold that. This action's crazy. Draw should be met. But yeah, I'm going to stop myself early because I know every time I do replay sessions, I'm going to go for like an hour and a half. I catch myself second guessing myself quite a bit when I find the displacement and the fair value gap formed, but it maybe goes up higher than I expect and then comes back down toward the fair value gap. I always think it's going to push back down through the fair value gap and I'll stop out. Again, that's where fear comes into play, right? What you can do to avoid that is use low size, paper trade for a little bit to build up confidence with your edge and just continue to backtest it, right? You just have to build confidence because fear is when, you second guess something. You don't have the confidence for it. Justin, people be watching you butt naked and you never know. Do you have any advice on when the price displays upwards and forms a fair value gap, but it maybe goes quite a bit higher than comes back down to a fair value gap? Like, is that still valid or like a certain point where you'd like, no, I wouldn't take this fair value gap anymore? Wait, hold on. Do you have any advice on when the price displaces upwards and forms a fair value gap, but it goes quite a bit higher than comes back down? I'd need a little bit more context. I know I talk very fast. I'm sorry. Justin, is there a certain way to back test? Like, I want to start doing it, but I'm not sure if I'm doing it correctly. The way the back test is literally just do this, right? We know our model. Go back in price action with ES and NQ and see if you can find it. Or, replay session. Basically saying, would you use for like and then it comes back down later in the road? No, I wouldn't. If the draw is already met, right? If the reason I would have took that fair value gap is because I would be targeting the draw. If the draw is already met and then we come back down to that breakaway gap, I would not take the trade because then there's no reason for taking that trade. The trade's already over. The move already happened, right? There's no setup anymore because we had confidence in the draw, but the draw's already been met. Like if 10, 15 minutes later it comes to the fair value gap I found, but he already answered it. I just need to get rid of the fear and confidence. Okay, gotcha. Which fair value gaps are valid, which one's not? Again, all has to do with structure, right? This is, again, when you start getting into ICT, this is what your charts are going to look like. This is what your charts, again, first thing I can tell you, if this is a indicator, take it off. If this is an indicator, take it off. Because indicators are going to throw you down the wrong line again, because that'll mark out every fair value gap without context. And if you just trade a fair value gap, you're not going to be successful. You need context. Using the 15-minute with the volume profile, we are in a point of control and it bounced perfectly at the bottom of the slope. Nice. All right. I think that's all I have for you guys tonight. Does anybody have any extra questions before I end the session? Music sesh? Not tonight. I got to get ready because we have our masterclass tonight. You uploaded to YouTube this? I'll upload this for you guys to see, but not on YouTube. Much love, guys. All right. Enjoy the rest of your night, guys. If anybody has any extra questions, just feel free to at me in the Discord. I'll get back to you. So enjoy the rest of your night, guys. I'll see you all tomorrow morning. Peace.